For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to continue our discussion on mastering the trading process and be talking about the initial balance, and we'll also look at today's charts on each pair. So you've heard me say this on several occasions that the initial balance, the first two time frames of any trading period, can be considered the initial balance. Dalton talks about this in Dalton on Market Profile. If you haven't read his material, you can Google Dalton, read his books. But also Toby Crable talked about this for a lot of the style of day trading that he did. And I sort of adjusted that to the Monday, Tuesday, first 2 days of the week. And that also fits into the 3-day setups and the day count and some other things that we'll continue to revisit so that traders can grasp this material. And it's very practical because it's the process that allows you to continue to develop certainty. And then the two-sided coin of trading is knowing what you're looking for, what you're supposed to be doing in an actual, real, practical, live environment situation. It's actually a three-headed coin, if there is such a thing. But the second component is actually understanding how and why you're going to execute your trading plan. So I talk about locking in the money, but understanding that you're trying to target scalable, reproducible trading setups because you can grow those in size, not just go to the screen each day with concepts and get pips and then keep scaling it up because your account's bigger. I mean, again, as I always say, if it works for you and you're making money, then continue to do what you're doing. But it has to be simple so that you can execute it in live time, which brings us to the third component, which is actually your live screen behavior and execution skills. So people, often in the past will say, which hasn't been actually questioned to me in probably a couple of years, but they used to say, well, what are your back testing results? And, it all sounds good in hindsight and everything, because they actually don't understand that they're the issue with their trading. As I've joked about in the past, it's actually not even a joke. You could use a moving average crossover system. And just for fun, we'll throw that on our Canadian dollar 15-minute chart at 2034. No peculiar attachment to this whatsoever. Just the fact that I'll demonstrate that if you follow a model that you understand has edge, you could actually probably do well with that in terms of scalping in and out of the market. This may require you to be available at all kinds of different times because obviously the movements can occur at different times. But the point being is that backtesting and all that's great if you're running an algo. But if you're just going to the screen as a discretionary trader, and I've said this over and over again, I have no idea how you're going to behave. I have no idea if you're going to take one more trade outside of your plan that just because it looks good. I have no idea if you're going to over leverage on the wrong setup. Maybe you've had an emotional breakdown during the day, or maybe you've had a fight with your spouse or your partner, or you just hate your job and you're frustrated, or you had a really good week and then you just you're taking a large loss on a Friday and you just can't get yourself to take that loss. And I can guarantee you there are traders out there who are doing all these things, and I've done them myself. So my hard and fast set rules are all designed about, number one, protecting me over the long term. Number two, keeping me away from the screen. So if I go to the screen and I want to go to work at a set time every day based on recurring market behaviors, and market sessions, Asia, London, New York. And then I deconstruct that backwards and understand the process, the timings, the high and low of the day and the week, the behavior of the weekly templates, a basic model to track those daily templates, and then be able to come to the screen and target session trades and also greater sizable opportunities for high and low of the week, or high of the week, low of the day, low of the week, high of the day trading opportunities. So continuing that discussion, we talk about the initial balance. Monday, Tuesday will often form one of the extremes that will tend to act as the boundary for the lower high of the week. And so we'll go back and visit this concept to see how reliable it is this week. Again, the pink line is our Monday. I'll go through all the pairs just briefly. You can go do your own homework. Again, if you learn to do it, you'll get better at it. If I just tell you how to do it and, there's no attachment to you actually digesting that. So I always talk about doing things with your hands, your eyes, and verbalizing that, and then bringing that into your nervous system, not only in those three pathways, but then auditorily. Then you're developing the neurological and neurophysiological processes and synapses to improve your skills and your understanding, your patience, and your ability to execute better and better and better in a live trading environment, because you're not chasing all this stuff. Is the trend up or down? Should I get in now or later? Should I sell it or buy it? Going to the screen and looking for setups. So we talked about day one. Like for today's video, we'll keep it so simple so that the people who are struggling with the day count, we don't even worry about it. We'll just talk about Monday, Tuesday, Wednesday, Thursday, Friday. That's it. So Monday goes up and makes a high of the week. So if our theory is that Monday and Tuesday, the high and low of those 2 days after they've traded may form one of the upper or lower boundaries for the week, that can give us a thesis for 1 push, 2 push, 3 push possible large trade setup. So we talked about the stair step on yesterday's video. Go and watch yesterday's video. Somebody said to me, what does climbing stairs have to do with trading? And I jokingly said nothing unless you want to make money. So we'll call step 1, step 2, step 3, maybe a break in structure, and a large move. So the further you get pulled up the stairs, the higher the probability that we will see a correction or a trade setup. Now that is different than, again, trying to counter trend a trending market, where we can see a market pull back and coil sideways and continue for an explosive move. That's a different scenario. And again, we'll look at a couple of examples of that, because we're not trying to get in front of a trending market. We're looking for very specific setups. So climbing stairs has to do with this. We peak formation low. Day one can be, we'll call the first day is always the day where the peak formation is below the previous day's low. The next day, day two, can be an inside bar, as we talked about. It can be a market that continues to move in one direction. And then day three, we'll take out the high of that move in a normal situation and give us possibly maybe only a session trade, but it may be the break in structure, or it may be a larger setup. And this trade itself could, in some cases, end up being our first red day. So we'll talk more about this in future videos, but I get this all the time from traders. Every down day that they see, they call a first red day. And that is not the case. That is not the case. Like somebody said yesterday, that the Canadian dollar was a failed first red day trade setup. And we're in an uptrend. I don't expect the first red day to be a first red day trade. What I expect is a first red day trap. So you have to understand the context of when you're looking for these first red day trade setups. When they show up, they can be the beginning of large moves, but it all comes back into the context of where we are at with the high and low of the month, the high and low of the week, high and low of the day, and how it behaves into the new day. So first red day can have significant opportunities. But if you're trying to call a first red day trade when we're in a screaming bull market, we're not quite there yet. So coming back to our discussion about initial balance. So let's just run through these charts. It's Friday today, and we just had an interesting day. We'll talk about that in a second. So we're heading into Friday's trading setup. I want to talk about this just for a second. Canadian dollar, we see a rising trend line all the way up until day 3 this week, which was Wednesday. So again, for traders who keep asking me, no, I'm not trading trend lines. What I am looking for, though, is a trend line break and a retest. And if Monday, Tuesday form our high and low of the week, and we'll come back to this just briefly, we can see that Tuesday breaks through Monday's low, but also into the breakout of Thursday's high. Friday's high, and they trade through that on Monday, put a new high in place. They continue to expand the range. So again, this is an example of where on a Monday you could scalp that, but you wouldn't be looking for size because you're in a market that's moving up. It gave us a high of the day 50 pip trade for a session scalp. But talking about the Canadian dollar, day 1, day 2, day 3, high of the week, the high of Monday, inside bar on Tuesday. We talked about this pattern. I want you to look at this pattern and understand the simplicity of this pattern. Volume below the blue, I'm going to call it the blue tracer. Okay, that's the low of the day, and they traded back above it. Volume on day 3 above the blue tracer. Okay. Somebody said, I don't get it. What does an inside bar have to do with it? And why did you call that an inside bar? And different things. I want you to look at the pattern. Day 1, day 2, day 3. Day 1, volume below in an up move. Okay, in an up move. So on a down move, it would be volume above. And we'll look at some examples of that. Day 1, day 2, day 3, volume above. Peak formations are above. It's an inside bar. In this particular example, it triggers inside bar traders for the vertical explosive move. But look at the pattern of price up and down, up and down, up and down. That's a 3-session setup. London, US and Asia are inside. London puts in the peak formation. London is what takes out the high of the US session. 1 session, this is inside. They trigger the inside bar longs, but the peak formation is in London. London to London, peak formation, stop hunt for the vertical move down in the US session. So Monday and Tuesday have now traded, and we have a high of the week. They trade down into the low of the week on Tuesday. They trade down to the low of the week on Tuesday. So this will help you clarify what may potentially going to happen on Monday. We trade down into the low of the week. We're inside. We have volume below. We have volume below Monday's low on Tuesday, Wednesday. Volume below, an inside bar, and lo and behold, we're now breaking through Thursday's high as an inside bar. Now, this is an inside bar inside of the high and the low of the week, which now potentially can act as a actual breakout trade. I'm not suggesting this is a trade. This is not a trade recommendation, so don't go and buy this or anything else, but we have a trend line break, a low of the week put in place. They pull it back inside and trade down into the peak formation volume on day 1. Second day on Friday, we trade down into it. We finally break the high of the inside bar. So we now have, well, technically it's borderline inside bar, but we have just broken out of this range inside of Wednesday's high-low. And so this market potentially maybe a grinding situation back up to Wednesday's high, or we can see this pull back and find, as we did today already, they retested the breakout not only of the Asian session high but the Europe-London window. 3 pushes down for the explosive reversal trade. They've now triggered the high of Thursday. So Monday, Tuesday acted as the high and low of the week. We were inside on Thursday. Friday has broken the high of Thursday. So just coming back to the pattern, this would have helped traders to nail in the Europe session, Europe-London window. If you're in North America, you might not have been up that early, but that's a great day 3 high of the week opportunity just by using the initial balance. Now, if we come and look at the Swiss franc, and I'll just suggest that most of these pairs and instruments are very, very closely related in their chart patterns, including oil, gold, S&P, NASDAQ. So pound, euro, New Zealand, Aussie, oil, and gold, and the indexes will move in similar types of patterns. Not exactly, but similar types of weekly patterns. There is a correlation there. The US dollar crosses can vary somewhat, and we'll look at some examples of those, but just we'll blow through these. Again, Swiss franc, Monday's high. We get a same similar situation that we just saw on the Canadian dollar. A day 3 trade off the high of the week. Monday, Tuesday, we have our Monday, Tuesday trading. There's our higher low of the week. Our higher low, which they trade through, put in a low in place. The difference here on the Swiss franc, you'll see they've traded back up into that peak formation and broken it, whereas on the Canadian dollar, we were inside of that breakdown. So Tuesday's low was broken down low, and they traded inside of that range, whereas on the Swiss franc, we are down below Tuesday's low. So this is an interesting scenario. If this was to break down, they could revisit these lows. But the great thing is that day 1, day 2, if we come back and look at the Swiss franc down low, we don't have any volume trap below a daily level. We've just broken out, so this could end up putting in a topping pattern and breaking down. No idea. We have our volume on day 3 above, so peak formation above the high of the week, which ends up being the high of Tuesday. But again, the volume gets trapped above the previous day's high. And on day 1, on our Swiss franc, volume gets trapped below before they move it up. So peak formation low, peak formation high. And that obviously can set you up for a bias in each session. If we're inside, we talked about the 3 pushes down inside. These will all be different variation type patterns. Okay, the Canadian dollar, the inside bar day, 3 pushes down, London puts in the low. Swiss franc, the US session puts in the low. 1 push, so we break structure. 1 push. 2 pushes into the London Open, and then a 3rd push into the US session. So again, just subtle different variations. If we look at the Japanese yen, again, we're looking at initial balance the first 2 days of the week. We have our Monday, Tuesday. Put our Monday, Tuesday boundary up there. We'll get rid of this Tuesday's high in a sec, or Wednesday's high. And we talked about Wednesday's trade trapping volume up high, but just sluggish after the huge move last week. Bit sluggish moving out of that higher range, but still a day 3 high of the week sell in the US session. And that, again, you'll notice the volume is below Wednesday's low before it reverses. So just coming back to that volume above. Very subtle, very messy chart this week on the yen. Volume above. Tuesday into Wednesday morning, and then Wednesday's lows below before coming back inside. So again, a bias if you're trading Asia. A bias if you're trading Asia that volume may be caught and they're going to reverse this market. A bias if you're trading Asia that volume is caught up top and the yen potentially may have a session scalp in that session. Still trading inside of that peak formation high and peak formation low. Volume is up high, higher up in that 75 pip box. So again, coming back, we have come up 100, 200, and 300 pips from that large reversal. So we possibly could see this market continue back up to the high where it started from, or we may see the market, as we potentially looking at the other pairs, if it was to break down and come back up, we could see this roll over, maybe even just down into level 2, but we've come up 3 levels of rise and the market has gone into consolidation. No idea what it's going to do. We'll have to wait and see. But Monday, Tuesday, again, formed our boundaries for the high and low of the week. Tuesday's low ended up holding, and so did Monday, Tuesday's high, same range. Monday's high and Tuesday's low, and the market stayed consolidated on level 3. Look at the British pound, and again, initial balance Monday, Tuesday. If we draw we had a big range day Monday, Tuesday. Obviously, the peak formation low on Monday. Market traded down after that, day 1, day 2, day 3. Better yet, let's call it 1 push, 2 pushes, and a 3 push down into the peak formation low. So again, the day count. What's the importance of the day count? Because the day count will help you align the bigger trade opportunities when they present. This is a short squeeze after the volatility on Wednesday for the US session reversal. And then the pullback. Okay, we talked about, let's go back to our day count again. We have, if we have volume trapped below a peak formation, this is for me day 1. Day 1, they don't take out the previous day's high. I'm looking for the 3 peak reversal inside. London puts in the low, break a structure, US continues the trade. Day 2, we're in day 2. Day 3 will typically blow off in the direction of the trend. Go back and look at the 3rd day in a session. It typically blows off because that's what takes volume outside of the previous day's high or low. We see that today in the Asian and London session for a high of the week, high of the day, sell setup for London session traders. So again, it's a matter of being patient and allowing it. Some traders are trying to go long, but you notice the difference, the stair step up, the escalator down. Now we're seeing this market pull back up. I don't know, it could roll over later tonight. I have no idea, don't care. Today, whatever. But we have a break in structure. So for traders who ask about the trendline break, go read Al Brooks again. These markets are channeling until there's a break in structure, and we'll either see a retest or a failed retest. And our high bull, our 3rd level, being potentially locked in up top. And again, we may not see this market move or break till Monday. But Monday, Tuesday, in this particular case, we had large volatility inside bar on Tuesday. Monday's peak formation low acts as a support area on day 3 for the explosive reversal. Monday, Tuesday. And now we have a day 1, day 2, day 3 type of scenario. Now, we can get, if this market was to close as a bull candle still up top, then we still have our potential reset on Friday, and this market could continue Monday, Tuesday, Friday being our day 1, day 2, day 3. If it drops down, we got the volume above. That's our day 1, and Monday can be our inside bar day where they reverse and flip the market, and we get a Tuesday peak formation, possibly trend day into this rising 3-day setup. Again, the euro, very similar to the pound. We'll go back, initial balance Monday, Tuesday. So for those who are tired of hearing my voice, the ad nauseum is to establish the repetition of the process. Repetition of the process. Monday's date, high and low. Tuesday does not break any of those boundaries. Lower highs, lower peak formations inside. We had the 3 peaks on day 2. Didn't break Monday's boundaries, but we go inside for 3 peaks, 3 sessions. Get rid of this. So for traders who ask, can peak formations be in the gap? They can be, but you have to understand that the peak formation should have already been established in the 3-hour window. Any other peak formations are trading back up into or down into those peak formations, which gives you your thesis for your trade setup when the new session is about to start. Peak formation into a peak formation. Third push up for a possible retest back down on day 3 into the low of Monday. Monday, Tuesday, 80% of the time will act as the extremes. And there's our day 3 squeeze for an explosive move in the US session on the euro. Does not take out the previous day's high. What are we looking for? 3 peaks back inside. Obviously the euro, we may see that peak formation in the middle session in London. Break a structure, pull back, loading. I call this the bow and arrow. So there's my bow. And I'm pulling the arrow back, cocking the gun for an explosive explosion back through the target, the high of the day. So today is the same process. We have, let's count the days again. Euro. Somebody said to me earlier, do you see any setups today? And I can't answer that question. That to me is just the worst question in the world. If you ask me that, I might have to block you. So I don't, what do I think setting up? Everything's setting up. Everything is setting up. But is everything setting up as a best trade playbook setup? I have no idea until I go through the pairs. So day 1, day 2, and guess what happens on day 3? We're above the previous day's high, heading into the London Open. Do you notice something? We go to the high of the day and we get the drop through at the high of the week, breaking structure. Okay, so let's just talk about this for a second. I said yesterday, draw your high and your low heading into a session. Draw your high and low heading into a session. Okay, so I have a high of the day and my most recent low is over here. I'm talking about peak formation lows and sessions. So we have a high and we have a low. Lo and behold, they give us a low of the day in the first hour. I said the first hour will often create a high and a low, and I'm talking about the smaller time frame, but this gives us our low of the day with our high of the day in London, and there's my high and low. Now what I'm looking for, we had news at 8:30 New York, is a peak formation, a retest into a peak formation, New York Open, after the news, second hour, whatever it may be, into the high or into the low. So we had our news candle, and that gave us a lower high inside. And then in our second hour, the market works down into the low before reversing. So we get our little 3 push pattern into the second hour, and they go up in the open of the New York session. There's our break in structure. There's our break in structure. Okay? We get a little 3 push pattern, our break in structure, and then count the pushes. 1 push, 2 push, 3 push, scaring people out who are long early. Right? They get in long just after New York opens. They come back in 3 pushes and then explode. This engulfment is a late entry, but the safe entry. So this engulfment is a 1-bar stop. So let's talk about that. We got a 1-bar stop. We have a 1, 2, 3. And let's zoom in. So I get this question quite a bit. I still don't get the 1, 2, 3. Okay. You need to go study then. Study your charts because it's on 1 minute. It's on 5 minute. It's on a 15 minute. It's on a 1 hour. It's on a daily. It's everywhere. It's 3 weeks, 3 days, 3 hours, 3 bars. But this is right into the end of the half hour reversal and then the retest of the high of the day. So let's go back to our original high and low. They took out the high from the news candle. Obviously didn't get all the way back up to the peak formation high of London, but we did retest the lower peak formation on the smaller time frame, which is why I've mentioned to traders when I go to the screen, I mark off the levels on the 1 minute because my expectation is that 2 things, distance and time. So this market is going to go, let's call this 50. Our peak formation is at 50. So 25, 25, and 25, that's 3 levels of rise. And we're 3 hours into the trade, I'd be getting out of the market. I'd be locking that in. As soon as we come out of that window, you notice we come up one more time in the new hour, but we're into the 3rd level of rise. You should be locking in, whatever, 30, 40, whatever pips and be done. Because this is not an explosive move. It's Friday. They may just peter out and go sideways into consolidation. But I'm talking about just sticking to the process. We have our 15-minute levels, high and low. Now I'm looking at the New York time frame. New York session window, 3 pushes down into the low. They reverse the market and break structure. 1 push, 2 push, 3 push. They're jamming into the low. Whenever they jam into the low in this timing window, expect the short squeeze. Bang, back up to the high. Now, okay, the euro, you're going to get whatever it gives you. There's a peak formation. We're going to get maybe something above double zeros. It pushes up there. There's 25, 30 pips in 20 minutes. That's not a bad thing if this was what you traded, if you were trading the euro. Not a huge move, but the process works no matter what. The markets are going to move. There's a good, clean, simple trade. You had a 1-bar stop. If you got in over here, if you were in early, same thing. It's a 1-bar stop, but you had to get some heat because that's where they broke structure. 3 pushes back down in, and then the reversal back through the high of the day. Coming back to the original conversation, Monday, Tuesday. Monday is the low of the week. Obviously, they've traded through the high of the week. Now, just for a little reference point, we have 1 full expansion of the weekly range to complete our week of movement. So for traders that have asked, this is not Fibonacci, it's not anything mystical. It's just 100% expansions and 50% expansions of the range. Gold, we have a high and a low made on Monday. I'm going to just kind of speed this up. We have a high and a low on Monday. Inside bar on Tuesday, 3 peaks. Again, write this down. If it doesn't take out a daily high or low on day 2. Okay, so why is it day 2, Stacey? Because it's day 1 is the day that has volume caught above. That's day 1. It could be Friday, which means that Monday is going to be day 2. Right? So Friday, we had volume above that broke down. So here's where your expertise needs to get better and better, because we had peak formations above on Friday, and they broke down and caught traders trying to buy the reversal in Japan, but the peak formations ended up being above the previous day's low, 3 pushes up, trapping volume away from the low of the day before rolling over and collapsing. Day 1. Day 2 is inside 3 peaks. Day 3, low of the week, and this 3 peaks inside this creeping trend, sluggish. Oh, gold was crap on Tuesday. I shouldn't have traded it. Think about why. It's a creeping trend into the low of the week. That's order flow for an explosive move. Okay? Trend line break in structure, retest, right at the timing window, pin hammer, short squeeze, explosive move. Day 3, reversal. So now guess what? This is where people still struggle again. Now day 3 is below the previous day's low. We have volume trap. That's day 1. And look what happens on day 2. 3 peaks. London puts in a low. They pull back. 1 push, 2 push, 3 pushes. Short squeeze again through the high of Wednesday. Okay, and we have Monday's high broken out of, breakout, pullback, the retest is into Monday's high, and then we have the 3rd day, and I have no idea what's going to happen today, but we're above the previous day's high. We went back to the high of the day, so they've gone further out, which means the high wasn't in place yet. They put a high in place. They've gone up to it and dropped away in the last hour. If they break this low, this may be our new day 1 heading into Monday if they close below the previous day's high. I don't know what's going to happen. I don't worry about it. I don't predict. Somebody wrote me a long email telling me about the yen and the euro yen and the pound yen and how it was going to go to these levels, and I thought, geez, that's who cares? Just come to the session and see if that thesis is correct. You should be able to identify high probability setups going into your session on those pairs if your theory is playing out. So day 1, day 2, day 3. Again, this is a day 2 trade inside. Right, day 2, if it's an inside day, there's your day 2 setup. And day 3, high of the day, high of the week, for traders who are trading later in North America. And same as the euro that we just looked at, there's my high of the day. My most recent low of the day would have been the Asian session low. But they gave us a low in the first hour of the US window. London makes a high, US makes a low. Go to the New York Open. Again, same process. News. If there's news on the calendar, the first thing I'm thinking about is 9:30 New York. Market comes down into the low. 1 push, 2 push, 3 pushes. Little bear pin hammer right at the low. Start of the second 15-minute bar. And there's our coil for the explosion up to the new drawn high of the session. The pullback is the opportunity because they've already gone up to the high of the session, but we know the high of the day is up top. Unlike the euro, the gold's most likely and doesn't let anybody get away with anything. Engulfment, pin hammer, anywhere under the numbers is in this situation. I'm looking anywhere under the numbers. My thesis is high of the day. That's a 75 pip run. So again, high of the day, box. Maybe you want to get down fill to 50, but this is the explosion, the breakout pullback, and then the continuation. That's a short squeeze pullback to the high of the day. So again, gold, go back to our 15-minute chart. Monday, Tuesday puts in our high and low of the week. High and low of the week. Monday's low ends up holding as the low of the week. They break out and rest on Monday's high. If we take our range expansion of Monday, didn't quite get there, but we definitely did a 1.5, and maybe not over. Maybe this will continue. I have no idea on Monday. We may be targeting back towards last week's high. Depends on how we close and how we trade on Monday. But we've got almost a full range expansion, 1 3/4. Again, you'll notice where that market turned around at in the new 100 pip box. Went up 25 to 50 pips before reversing. So we'll see what happens. But the process can help you identify the best opportunities in the session on the day within the template for the week. Keep it simple, traders. Hopefully you got value from today's video. Have a great weekend. Keep getting better, and may the markets go with you.